Hey, what's up, everybody? It is Wednesday, September 9th. Let's go. So, market rebound today, but we settled well below the intraday highs. Actually, we saw some selling late in the day and it brought it down. So, not surprising given the pullback we had. I mean, this mentality of buy the dip is still in there, but I was not surprised to see the selling late in the day. Yesterday's put-call ratio fell back below 1.0. It was actually 0.88, so they were basically buying the dip yesterday. I'm not sure if that's going to hold. I mean, I'm looking at the corporation income tax flows, as I've been talking about, and we had another big miss in the statement today. Down again versus last year. So that makes 10 out of the last 12 statement days, daily corporation income tax deposits were down relative to last year. Now, to me, when I look at that, it indicates or it suggests a sputtering economy. I mean, if the economy was still ramping up, if it was accelerating, I think you would see those tax flows increasing over last year. For example, right now, total corporation income tax flows are up $783 million over the same time last year, but in July they were up $3.3 billion. So that positive gap has narrowed significantly. It's going in the wrong direction. So I think it is indicating a sputtering economy, and if that's the case, the market still has more downside. So I don't think, I think that's the outlook right now. Tomorrow we get an ECB meeting, and what is that going to do? Well, usually that is negative for the euro for totally ridiculous, stupid reasons, only because the zombies, every time a central bank does something, unless it's the Fed, they're selling the currency. So we're still in the, and that's what I expect to see tomorrow. Hang on one second. It's New York City. Things are still happening here, folks. That's what I expect to see tomorrow. You're going to get a knee-jerk reaction of zombie selling in the euro. The euro consolidation from the recent rally that started in July, that is just, it's a consolidation right now. It's a pause. Euro's going to go higher. It's a pause. So the market's giving you an opportunity to buy in. Same with the other currencies. Although the euro and the British pound both, I guess, have been the weaker among the currencies. Oil popped back up again today. Tomorrow we will get the EIA report. As I've been saying, look, producers have been short for like 18 weeks. Now, I rarely go against what they're doing, but they've been buying back their shorts. And they've been reducing their net short. And I'm pretty sure when we see the data on Friday, and given this pullback, we're going to see them buying once again. They're buying into this dip. Now, I said that the oil numbers, when you look at the data every week, is not that bad. I mean, until the hurricane hit, you had really good gasoline demand. It was up there at pre-COVID levels. Distillate demand was bouncing back. You had good inventory draws that we've been seeing, although yesterday in the API we saw a crude inventory build, which was a little bit of a surprise, but we'll have to see what the EIA says. Gasoline inventories almost equal to where they were last year, so that big surplus has been whittled down significantly. Exports are strong. And you had this gigantic reduction in domestic crude oil production, 1.1 million barrel a day drop in the latest week. It went from went all the way down to 9.7 million from 10.8 million. Big drop in 1 week. So and imports are way down. So with imports way down, I suspect we'll see continued inventory draws in crude, notwithstanding what we saw, this build-up in the recent week. I don't know the reason for that. Maybe it's a 1 week aberration. So I actually think the oil fundamentals are looking a little bit better. Now, having said that, They're selling oil because they see the stock market going down. So if the stock market keeps going down, you probably still have some downside here in oil. But some of these energy stocks look cheap to me. I bought Tesla yesterday at 345. 270 is my next level. All right, it was up today. I don't know if it's going to hold, but I mean, this pullback, I think, is a good opportunity to buy. What else? Gold was up today, still consolidating. So yeah, I think the economy is sputtering. At least that's the indication I get from the income tax flows, corporation income tax flows. That's profits, right? That's sales and profits. And if that's the case, market probably has some more downside. And it doesn't look like, to me, if you look at the put-call ratio yesterday, 0.88, they're buying the dip. They're still buying the dip. So they're bullish. The bullish mentality is still there. They're still buying the dip. So that's the update for today. My new podcast has been uploaded. All right, I talk about the market correction. I talk about, what the hell do they mean when they say it's an artificial economy? I mean, that is the stupidest, most ridiculous thing I've ever heard. You got to listen to that part. I talk about, is New York City going to come back? That's a hot topic that's being debated out there online. You had that one article by that guy who posted the article on LinkedIn, and then Jerry Seinfeld chimed in, and then back and forth, a lot of people chiming in on, yeah, New York City's going to come back. No, it's never going to come back. I talk about that. And I talk about these low-life scum who are out there who have made an industry about predicting doomsday all the time, and they're always wrong. Just constantly predicting doomsday because they are miserable scum and they want everything to go down the tubes so other people can be in misery just like they are. They are miserable scum. I talk about that. Go to my podcast. Look, the link to the podcast is right here in the description below. So you don't have to go anywhere. Just click on it right here. See you tomorrow. Bye.